Hello, everyone. I hope everybody had a good lunch and is ready to push through for the afternoon here, the last afternoon of the conference. So my name is Berard. I'm a strategy partner at Momenta Partners. I work on both the advisory team as well as the venture capital team. And today I'm going to talk about our perspective on LoRaWAN, LPWAN in general, and the IoT market, and how we value ecosystems and what we think investments in this area could do to really enhance that, grow the market, and really deliver solutions to customers. So who is Momenta? At Momenta, we're connected industry growth specialists. We work only in the connected industry space. And in that domain, we have three complementary practices. The first practice that I'll talk about is advisory. And here we do strategic consulting to really accelerate IoT and connected industry solutions with customers, to help drive digital transformations within organizations, and also really help growth, either organic or inorganic growth. Related to that, the other practice we have is talent. And talent is about placing key talent in organizations that need strategic leadership or technical talent. And we have both executive and professional placement. And here we've placed over 200 leadership placements across various different industries. And you can see some of our key customers there. And ventures, which is a little bit more about what we're talking about today, is really where we do investments in a very disciplined way to foster technology, solutions, and really grow the connected industry space. And you can see some of the logos here. These are some of the current investments that we had, and some of the previous ones, actually. So we like to call ourselves venture industrialists. We are deep practitioners in connected industry. We have a deep bench of over 20-plus connected industry experts from across the US and Europe, including the former CTO of GE Oil and Gas, the CTO of IBM IoT Watson, and myself, I was the chief architect at Schneider Electric for their EcoStruxure technology platforms. So everyone on our team has a really deep understanding and has been in the connected industry space for a very long time and has built real solutions or led teams that have built real solutions. So we have that deep industry experience. We're also experienced growth partners. As a group, we have worked with some of the industry leaders across various different verticals, again, in the connected industry space. And we focus exclusively on digitization. We do end-to-end exclusive focus in that space. And then we're also purpose-driven and disciplined investors, which is a little bit more to the theme that I'm going to talk about today. We invest purposely and precisely to accelerate growth towards healthy exits. We call these orchestrated exits. And I'll explain a little bit more about our approach to investing and our approach to growing ecosystems in the next few slides. Our approach is to be really deeply thematic and purpose-driven. We started investing in 2012 with 6 companies. You can see the 6 there. And at that time, we were able to do 2 pretty significant exits. ThingWorx to PTC, which was a really big exit there, and I think we're all familiar with ThingWorx and PTC and what they've done. And Kubiachi to Husqvarna. And so that was our first investment fund back in 2012. In 2015, we launched what we call our Connected Industry Fund. This is our second fund. And here we have about 21 companies right now in that portfolio. We've had 1 exit thus far. Many of them are still longer term. They're early stage, much earlier than we were in our first fund, mostly seed round companies. So we're looking for a little bit longer period of time, but also getting in a lot earlier on those. And our approach here is to really have an established investment process. We have a framework for how we source, for how we assess, and how we work with various different startups. And we use that and apply that across all of our potential investments to make sure that we're getting that consistency and we're driving to the themes and the purpose that we really care for. We have what we think is a proprietary deal flow and unique access. Because we have 3 practices, we're not just venture capitals, we are able to get industry experience, industry contacts, and really understand the pulse of the industry. And we know that very early on. We work with very early stage startups That gives us a lot of insight as to what people are thinking, some of the ideas and the proof of concepts they're doing. We also work with established players either through talent or advisory. So we see the key problems that many organizations are struggling with, many organizations are trying to build. So we have a really good view of that connected industry. And again, we're only focusing on connected industry. So through that deal process, we have a really unique view. And then again, through the combination of those practices, we have a very strong network. So when we're looking to understand where we should invest, what problems need to be solved, what areas we need to find a startup for and encourage and work with to grow, we take all that into account. And this has actually yielded some industry recognition. In 2016, we were recognized as one of the top 10 infrastructure advisors, and in 2017, a top 10 smart cities advisors. So we believe that this is a viable approach, and that's been validated through some of the industry credentials that we've had. So we really think that this is a very unique position and has a lot of value, again, in the connected industry IoT space. Moving forward, let me talk a little bit about our connected industry fund and our approach to ecosystem building. Our approach is to really invest at the intersection of the verticals and the horizontal enabling technologies. If you look, the market size here and the potential is quite good. In the vertical solutions, we see a market potential of around 65 billion and a 40% growth rate between 2015 and 2020. So really good, solid numbers. Tells us that there's a lot of potential there. And when we talk about vertical solutions, these are very similar to what many of the other presenters have had. In our case, we look at energy, we look at manufacturing, we have smart spaces, and for us, smart spaces includes smart cities, smart buildings, and smart agriculture, and then supply chain and logistics. And across those four, we really look for things that are key. When we're looking for a solution in that area, we look for key problems that need to be solved in those verticals and unique ways that companies solve those. And one example of a company that we have invested in the vertical side is a company called Rev2. And Rev2 does some really interesting things to enhance support and services. They take data from assets and connected devices, like we all know from the standard IoT architectures and values. They bring that data in, they process that data, they apply machine learning and AI algorithms to really optimize the support experience. Whether that is an end user customer, giving them sort of the right information at the right time automatically, or the support and service staff so that they have the right information so they can best serve the customer. So again, taking that data and bringing that in. What's nice about this is they're in a particular vertical today, but that solution can be adapted as the company grows and as opportunities abound to other verticals. So very much a land and expand investment there. When you look at the enabling technologies, these are the things that underpin IoT solutions. They underpin all of the verticals, all of the connected and IoT solutions. They are the enterprise platform, the edge products. So this is where you'll see things like cloud computing technologies and services. We saw some from AWS, we saw some from Alibaba, Tencent, and Microsoft. Machine learning, AI capabilities, connectivity. This is where LoRa and LoRaWAN and some of the technologies that are relevant to this conference fall into. And also security. And then on the edge side, edge compute and edge technologies for managing devices and software running at the edge. And so those are the underpinning technologies. And what we look for there are key adoption blockers, things that make rolling out a solution difficult, hard, or expensive. An example of a company that we've invested there is Crate.io. Crate is really interesting. They have a data service that's designed exclusively for putting in telemetry data from sensors, and lots of it. And what they're able to do is pull in data very, very, very quickly, store that data reliably, index it, and make it available for queries, which means you can then run reports, you can run insights, and analytics on top of that. And the reason why we invested in this company and the reason why we think this is unique is we see many organizations struggling with data, struggling to deal with that fire hose of information from all the sensors. Sure, that's a common theme that many of you have seen out there. And so we've invested in Crate so that technology is well supported and well positioned in the market and is a solution that we can recommend through advisory or that the industry can use as a whole. And so really we're looking at both vertical and horizontal in that aspect. And again, we have specific themes for how we want to make sure these things work in cooperation with each other. Now, our approach is fairly unique in connected industry, but the whole concept of doing an ecosystem fund and investing in an ecosystem is not necessarily unique to us. And two examples that I'll talk about here just to kind of get out of the IoT sphere to show that this is a model that works elsewhere. The first one is Stripe with their Stripe Platform Fund, and the second is Amazon with the Alexa Fund. So Stripe has a fund called the Stripe Platform Fund. It's managed by General Catalyst Partners. And it's really focused on two categories. The first are startups building key extensions and adjacent solutions to the existing Stripe platform. So these are things that add value, solve real customer problems, but are not sort of true core and core with what Stripe is doing. There may be things that enhance the solution, but something that Stripe does not have the resources to invest in and to do internally. And they are investing through, they're using the fund to create investments in companies that are building that ecosystem around their fund. The second thing they do is invest in marketplaces or platforms that build on top of that. And two examples of that are BigCommerce or Lyft. For those of you in the US, you've probably heard of Lyft. I don't think it's as popular in Europe, but it's another service like Uber. And they use Stripe as a platform. And so here, they're investing in these companies they're building on top and really driving a lot more business. And what they're doing with this approach and this fund is really driving a more complete solution and driving a whole set of maturity around that. And they've seen good success there. Switching ahead to the Alexa Fund, they're doing something similar, and they've provided approximately $200 million in venture capital funding to fuel voice technology innovation. These primarily initially were integrations to connect things like smart light bulbs and smart switches and various other aspects that can be controlled by voice. And they found a lot of success there, and in November 2017, they've agreed to double the size of that fund to continue to expand those capabilities. But at the same time, they're using that for regional adaptation and language so that they can, again, get more broad. And I think the theme here is both of these platforms have really high value, but going it alone is difficult. And so they're using these investments to build that ecosystem and build that. And this approach is not all that dissimilar to what is being done here in TTN. If you look at the ecosystem we built here, it's pretty incredible. So we think that there's an opportunity here from an investment side to help fuel that. So why invest in LPWAN networks? Well, first off, we see high growth and strong fundamentals. It's, I think, pretty clear to everyone that LPWAN is really a core connectivity and part of the story of IoT. If we want to connect, I was going to say 1 billion, but I think this morning the first presenter said 50 billion devices, which is a pretty audacious goal. If we want to connect all of those, LPWAN is a key component of that. It has long range, it has great battery life, as we all know, and it really enables a lot of the scenarios that you really saw early on in the promise of IoT. And we predict, and analysts agree, that there's a huge amount of growth potential here. So I have an example, but you could probably replace this chart with any of the charts you've seen from any of the other speakers. They're all really extolling the potential for growth here, and it's something that we really agree. We think somewhere in 2021 timeframe, it's about 24 billion, which is another big number. And from an LPWAN perspective, we think that we'll see about 1 billion sensors or devices actively in the field and deployed in the 2020, 2021 timeframe. So really, really, really compelling numbers. Now, at the same time, we feel that this area is undisturbed by traditional venture capital. Venture capitalists typically don't like playing with hardware. They don't like things that are messy. Well, as we all know, LoRaWAN and these networks, they include hardware. They are messy. We're now dealing with hardware not only in the land, on terrestrial land, on towers. We're also now doing it in space. So it gets really, really messy. It is evident by the huge amount of energy that we have at the show and all the wonderful people in the expo that are exhibiting here that people are not afraid of rolling up their sleeves and getting their hands dirty and dealing and taking these messy problems on, and neither are we. So that's LPWAN in general, but why LoRa? Why LoRaWAN? Well, first, we think that LoRa has a really good head start. There's a lot of initial traction that LoRa has had over the number of years. We have a global ecosystem of tens of thousands of networks. That was echoed again this morning by Alistair. Many of these networks are private. Some of them are public. Here in the Netherlands, we have essentially nationwide coverage with KPN. We have similar coverage with Orange in France, where I am from. And then we also have organizations like the LoRa Alliance that are really stewarding and fostering interoperability and the standard around LoRaWAN so that there's a vibrant ecosystem, that things are well supported, things work together. And so we think that LoRaWAN is really becoming the de facto standard, and I think most people here would not argue that point. I think most people here would be, yeah, that's pretty obvious at TTN. If you look at some of the proprietary solutions, Sigfox really validated the space in some of the operating models here, but they've also been struggling, and we've seen some of that. Some of the other proprietary solutions they've really retrenched a bit, and they really are focusing on these point solutions rather than taking this on. In contrast, LoRaWAN has really kind of been expanding, as we all know, which I think is very, very compelling. Now, at the same time, the mobile carriers are not standing still, right? They see the value in low-power, wide-area networks, and they're responding. So the two key standards that we really have to talk about here is NB-IoT and LTE-M. On the narrowband IoT space, we have about, these numbers are from end of 2018, about 60 networks deployed commercially available globally. And on the LTE-M side, we're about 20, right? So we're having some progress. But what's not written on the slide here is that today, only about 7% of carriers have LPWAN networks of any technology deployed. So we know that there's going to be a push from the mobile operators. They see the same potentials that we're seeing, and so they're going to invest here. And as you can see from the chart here, the estimates for growth in these are also very healthy. Now, we can look at this and say, oh, they're in competition and it's one versus the other, but we actually think that there's a lot of validation and complementary complements to having those. There's going to be needs that are met by one technology or the other, and we think that a healthy ecosystem is going to have both of those. We also really like the openness of LoRa and the community around that, and so we want to make sure that that stays a good, relevant portion of the market. And when we look at this from an investment perspective, why do we think that this is a good place to invest? Why do we think that this is a good opportunity? And I think these are four key things that really resonate well with us, and I think will resonate with a lot of folks here. The first is the flexibility. If you look at what you can do in terms of the business models, the operating models, even the network types within LoRa, there's a tremendous amount of flexibility that you don't get with traditional mobile carrier technologies, you don't get with Wi-Fi, and you're not going to get with other technologies such as Zigbee and so on. I actually did this slide before I knew we could do LoRa from ground to space, which I think is really interesting, and is actually, there's two companies here, and I was actually talking to some folks from both those companies, and apparently there's 18 companies working on that today. So that's pretty incredible. So I need to have somebody go edit my slide in real time. The second unique positioning here is critical mass. There's really, as we can see, a lot of people that have really invested either their time, their resources, or built companies and efforts around LoRaWAN technologies. Early growth has been slow, but with all sort of exponential things, the growth at the beginning looks really small and minuscule. When you double only a few digit numbers, they don't double very fast. But very quickly, they reach this critical mass and this snowball effect, and it starts turning over. And I think, if I was not here last year, but I think last year was kind of that turning point. And if you look at what's going on now and the number of people here, I think we're starting to hit that curve where that acceleration is really going. We really want to make sure that flywheel keeps spinning, and not only just spinning, but accelerating. And we think, from an investment perspective, investing in these companies, in these organizations that are trying to grow this ecosystem will help accelerate and spin that. So we want to make sure that we're pretty timely, and we focus on hitting that while it's on the up curve. Another thing about LoRaWAN that I think is extremely unique and compelling is its vast applicability. The number of use cases we can address due to the range properties, the power properties, and the overall technology is pretty incredible. And again, I did this slide before I knew we could do ground to space. And it's interesting how we can use those same technology, adapt it slightly with new antennas and a little bit new software, and open up a whole new set of possibilities. So if you think about putting sensors in really remote areas and being able to communicate those, whether it be hard industrial mining like we saw from Fleet Space, or like say smart agriculture in a very rural area, or smart buildings in a very dense city, being able to use that same technology and have that same device being used in many of those areas, we think is really, really, really interesting. We heard on day one the generic node, which I'm personally really excited about. The ability to take that single device and use it in so many different use cases is pretty incredible, and we think that that's extremely unique. And last, and what I'll end on from a perspectives here, is the open ecosystem. Having LoRaWAN be an open source protocol, having things like the LoRaWAN and the industry collaboration around that, and all the things that the partners and folks such as yourselves and the people that are in the expo here, what we really feel is that openness really fosters incredible innovation. If you look at what's going on in, say, 5G, if you want to participate in that, you have to be a member of the 3GPP. You have to be part of that. You're going to be one voice in a very, very large organization with very big players. In LoRaWAN, there's a lot more opportunity. It's a lot more open, and we're seeing a lot of incredible innovation here that I don't think we've seen in a lot of areas. And I think that's why we see so much growth and so many exciting presentations on the stage during the past 2 days, is because that growth, that openness has really fostered innovation and growth very unconstrained. And so we really want to tap into that from a VC perspective. So with that, I will thank you all. I appreciate your time. My colleague Lee Carter and I will be here in the end to talk to anybody. If you have thoughts, if you have questions, if you have any sort of insight that you'd like to discuss with us, we'd love to hear from you. We're really happy to be here. We're really excited about what's going on in the LoRaWAN ecosystem, and we really want to be surprised at what innovation can be delivered here. So with that, thank you everyone, and enjoy the rest of the show.